Today, I want to talk about how institutions are loading up on AMC shares and call options and even selling their puts. I want to explain what will separate the AMC reverse split from other reverse splits and how AMC's profitability could lead to the stock price increasing by over 400x. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Jason tweeted saying Barclays sold off all of their 1.5 million AMC puts, but still holds 6 million AMC calls and 500,000 shares of AMC stock. Citadel also lowered their puts by 2 million put options and also added more AMC shares. Now, as Forrest Run added, he said these institutions are planning for the future. That's why they recruit and pay their analysts huge salaries to project and predict where the stock is going and where the market is going over the next few months. And therefore these institutions, many of which that have been adding shares and call options and selling puts, must see something good with AMC. As we can see from their 13F filings, Barclays have indeed sold all of their AMC put options and they still hold 5.8 million calls and nearly 500,000 shares. Or rather, to be more specific, 5.8 million shares worth of call options worth around $25.8 million. So let's talk about how the AMC reverse split will be different to other reverse splits that have happened recently that have caused other stocks to plummet downwards. So Golden Tickets tweeted saying every reverse split races to the next reverse split. For example, let's take a look at Mullen to see what he believes will happen to AMC. I want to explain why not all reverse splits end with stocks being slaughtered and explain the key difference between a successful reverse split and a company failure. For example, CNBC posted this article all the way back in 2011 saying that reverse stock splits are actually good for investors. They use an example, titanium metals, which rallied 350% in the year following the effective date of its 10-for-1 reverse split. But the one I really want to focus on today is Priceline or Booking.com. So it says Priceline is the biggest winner. It went through a 1-for-6 reverse split in 2003 when the online travel portal was flopping around after the dot-com bubble burst. So Priceline enacted this reverse split after a form of pandemic or some kind of event completely out of their control. The company was losing money again for reasons out of their control, so they performed the reverse split to improve their stock price. Now again, this article was written a while ago as it says Priceline has since become an 85 bagger. Not a bad haul over the last 14 years. But let's be more specific and look at what Priceline or Booking.com has done since then. So we can see that at its lowest, Booking.com was trading back on the 7th of February 2003, adjusted for the reverse split, at just $7.50 per share. Since then, the stock price has improved massively, now trading at over $3,000 per share, hitting recent all-time highs just last month, over $3,200. That obviously is a massive return, and the stock was trading at a price fairly similar to what AMC and Ape are trading at now, pre-reverse split. But as I said, this price of $7.50 is after adjusting for the reverse split, and pre that 6-for-1 reverse split, it was only trading at just over $1 per share. So that's theoretically the same as AMC trading after the reverse split for over $30,000 per share. You can currently get a guaranteed free share of Tesla, a $50 cash reward, and up to 15 free shares, which you could always use to buy more shares of AMC, GameStop, or of Ape. All you have to do is sign up to Moomoo using the link in the description below and make the required qualifying deposit. Signing up to Moomoo is easy and it's free. It just requires that temporary deposit, and it's a really great way to help support the channel and to help support me as well. On top of that, Moomoo is also very easy to use. They've got tons of technical indicators and advanced charting tools and their own options trading platform. Again, the market cap of Booking.com is a fairly reasonable $108 billion, which compared to AMC's $2 to $3 billion is over 50 times larger. That's the same as AMC trading pre-reverse split over $500 per share, or post-split trading over $5,000 per share. But so what is different about Booking.com that sets it apart from other reverse splits that have happened recently, say with Mullen for example? Why has Booking.com increased over 400 times when many other stocks out there have fallen 90, 95 or 99%? And the answer is in the company's fundamentals that you can see have been consistently improving all the way back since 2009 and beforehand. So this chart here is the Booking holding or Booking.com's net income, which is profits, from 2010 to 2023. Again, I can't go back further pre-2010, but I imagine you'd see the exact same thing. Consistently improving profits every single year, all the way back over the last 20 years. Yes, obviously Booking.com's profits did fall here, but if we check the date, this is the first few quarters of 2020, when obviously nobody was traveling. But what this chart shows is a very, very nice and steady, consistently improving profits for Booking.com. Which, as a quick reminder, if you didn't already know, AMC is actually now profitable as well. If AMC can do the same thing as Booking.com and keep consistently improving profits, which it's also going to do for the third quarter of this year, AMC's stock price will do the exact same thing as Booking.com and run massively. I also don't think it would take AMC 20 plus years to have this 400 times gain or 400x gain, because we know about the severe pressure that the shorts are currently facing. When AMC starts running, everything will get out of hand for these shorts very, very quickly. Especially as Suspended POS has tweeted saying crypto is tanking, the S&P 500 is also tanking, and we've just had Evergrande bankruptcy news. And he said, I don't know why, but I'm getting a super bullish gut feeling right about now. When looking at stocks in the S&P 500, taking for example Tesla, we can see that many of these stocks have just crossed the long-term 1348 average downwards. This means the stock market over the last couple of weeks has changed direction, and we are now in a downward trend. The last time this happened was back at the start of 2022 and again in September 2022 when the market set new recent lows. If this continues, the S&P 500 will be setting new recent lows lower than December of 2022, which will obviously lead to more crashing in the market and more hedge funds, you guessed it, being liquidated. Especially as Charles Schwab has just announced a very irregular and massive AMC dividend. Now, I don't know if this is to do with the AMC reverse split or if this is something entirely separate, but Charles Schwab is suggesting AMC has just announced a $13 per share dividend. Now, I think this is related to the 0.1333 shares of AMC that are being issued for every share of AMC you have. Obviously, if you didn't know, 1 divided by 7.5 for the 7.5 share settlement is 0.1333. And obviously we know that if you are holding an irregular number of AMC shares, aka a number of shares not divisible by 10, you will instead receive a cash dividend replacement. That's obviously what I spoke about in my previous video, because it's that cash dividend that is being paid by the shorts. So whether Charles Schwab have somehow mistakenly changed 0.1333 shares up to $13.33 for a dividend, I don't know, or if this is something entirely separate. By the way, as we discussed yesterday, the shorts are going to be in big trouble having to fork out this cash dividend and also buy up AMC shares for your AMC share settlement. And finally, Hodl Ape has also tweeted a nice start for the day with the AMC cost to borrow average, minimum and maximum running again. We can now see that AMC cost to borrow average is over 1,000%, the AMC cost to borrow maximum is also over 1,000%, and the AMC cost to borrow minimum is, you guessed it, over 1,000%. That means every single short seller currently borrowing AMC shares is paying over 1,000% interest per year, aka paying their entire short position in borrowing fees in just over a month. AMC's cost to borrow has also been over this 1,000% for well over a month now, and therefore short sellers have paid their entire short position in borrowing fees already. That means the short sellers have already taken a 100% loss, which exceeds the value of their potential maximum 100% gain when shorting a stock. And that now proves the shorts are indeed trapped. Why pay over 100% in borrowing fees when your maximum profit could only ever be 100%? That also suggests the shorts are significantly down on their investment as well. Even if they shorted AMC 50, 60 or 70% so far, they've now lost all of that because they've paid over 100% in borrowing fees. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.